Hey everyone. So the question that I've been seeing a lot on social media over the last few days, or concerns from other traders, is that they don't know how to trade bear markets. They've never lived through a bear market. They've lived through or just started getting interested in trading right around the middle of these last couple years. So 2015, 2016, all of a sudden everyone started paying attention to stock market and they started trading, rode this humongous wave. It was fairly easy to do, just like in 2008. Pick a stock, it's going to go up. The problem is, and that's over obviously the long term. In the midst of the bear market, though, a lot of people don't know how to trade in a bear market. They know how to throw money at a stock and hold it, right? In the midst of the recession in 2008, as stocks were just tanking, you almost couldn't be wrong. Throw your money in a stock, forget about it for 5 or 10 years, cash out and make lots of money. But in the midst of the bear market, how do you trade, right? So even in 2015 or 2016 to maybe even about a month ago in 2020, it was hard to be wrong. We were in a very strong bull market. Now we are in a bear market. Everyone knows how to trade in a bull market, right? Everything is going up. It's hard to pick a loser. You pick a stock, it goes up, you make some money, you think you're a great trader, you know what you're doing, and you might be, but you also might be just getting lucky. You might just be getting lucky. It's a lot harder to trade in a bear market. I think maybe earlier on in the video I said bull, but I meant bear. It's very hard to trade in a bear market when everything is going down, everyone's freaking out. There are these little, like, what I call them are like last gasp, which is hard to say, last gasp pops in the market, like what we're seeing today. Although if you're watching this video 3 months from now, that doesn't do you any good. Today is March 25th. It is Wednesday, and it is currently 2 o'clock. I lost my train of thought. I forgot what I was saying. Well, whatever I was saying, what I'm going to say now is a lot of people don't know how to trade in a bear market. But I do, because I did in the last recession. So while a lot of these expert traders are coming out saying finally they don't know what to do, is because they've never been through a bear market before. So I wanted to give you a couple of quick tips. I think there's about 5, but I might go a little longer and I might do a little more. And I've also got my notes here because I'm trying to be quick with this. I wanted to do this video very quickly because I was seeing it a lot on social media today. A lot of people have been even messaging me saying, if we're in a bear market, my friends, who I'm very glad are paying attention, because maybe they missed the opportunity in 2008 to start investing, but they're aware of the fact that we are entering into another situation similar to 2008. Maybe they were nervous in 2008. Maybe they didn't have the money. Maybe they didn't have the skills. Now they're thinking, I don't want to miss this opportunity to buy. I missed it in 2008. I don't want to miss it today. But we are entering a bear market. So if you are a buy and hold investor, there are better times and worse times to buy in a bear market. If markets are going down, the strategy that I've had, which I've done and I've talked about in other videos, the strategy is buy incrementally, because we don't know when this thing ends. So one tip, I've done the video, you can check, it's the last one that I did on averaging down. You can buy in blocks of 25 at a time, every time the stock goes a little lower, or you can buy more shares as it drops, so 10 shares, 15, 20, 25, 30, all the way down. You can be picking up more and more and more, which overall lowers your overall price paid. But in a bear market, when things are doing these very volatile moves, and like what we're seeing today, markets are up a lot today. They were up a lot yesterday. People are confused. People are writing me, even my friends, going, did I miss it? Did I miss my chance? I'm not a psychic. I don't know. Maybe, although I doubt it. I think there's a lot more bleeding to happen. I think there's a lot more pain that we're going to see. So how to trade in a bear market. Step number 1 is to have very tight stop losses. Normally in a good market, in a bear market, we need stocks to have wiggle room. We need them to have room to sell off, so then more buyers can come in so they can go higher. So in a traditional bull market, a stop loss might be anywhere from 5 to 10%. whatever you're comfortable losing should be your stop loss. Just because I'm saying mine is 10 doesn't mean yours should be 10. Whatever you're comfortable with. So the stop loss is the most important, and you want to keep it very tight because these swings that we're seeing are very, very aggressive and volatile. A stock will go up $15, down $15, trade flat for the rest of the day. You don't want to get stuck on something, especially if you're not a full-time trader. If you're not a trader and you're potentially at a job, I know a lot of people are home, but if you are still working somewhere or even working from home and you don't have the opportunity or the luxury of checking the markets, it's a good idea to set very tight stop losses because yes, there are swings. Yes, the stock might go down 7 and then come back up 15, but you don't want to be on the wrong side of something where you're wrong. And you might be wrong because these markets are making up their mind on the day. The second tip that I have is to take smaller profits. You want to take smaller profits because, like I said, you want to lock them in. We don't know what's going to happen. Just like I said, a stock can go down $15, a stock can go up $15 in the matter of a couple minutes, maybe an hour. You want to lock in those profits. And yes, you might miss out on some profits. That is a fact. You might sell it when it's up 7 and then find out that it goes up another $7. But you definitely don't want to chase. Chasing in bear markets is a recipe for disaster because they are like last gasp trades. It is like when you take a fish out of the water, when you're fishing. If you pull a fish out of the water, he's going to be flopping around like crazy until it dies. But before it dies, it's going to have those little last gasp efforts where you think it's dead, or you are like, okay, it's slowing down here. Fish is almost dead. Nope, surprise, motherfucker. And the fish starts going crazy. You don't want to be on the wrong side of one of those. So if you happen to pick a stock that happens to go up a considerable amount very quickly, the best thing you can do is lock in that profit and not worry about that it went higher and not buy it when it goes higher. Oh, I sold it at 7. Now it's up 14. I should buy it to try to catch up on a little bit more of that gain. Don't be greedy. When a stock is already hitting record highs for the day or going up at an unusually fast pace, it's not going to last very long. And yes, it might last a little bit longer than you wanted. You're out at 7, it goes up to 14, you're angry. Don't be greedy. When you're greedy, that's when the pain comes. That's when the stock tanks, when you chase. And then you end up maybe even cutting into your gains from earlier. You don't want to do that. So like I've said in other videos, the goal with stock trading is to make some of the money, not all of it. Don't be worried. I know it sucks because it happens to me literally all the time. It happened to me this morning. Actually, I sold a stock. I bought it at 4. It went up to 5. I sold it, and then it went up to 566 within like 2 minutes after I did it. That sucked. That was almost double potential profit, almost double. So step number 2 or tip number 2 is to take smaller profits. You don't want to hold out for greed and end up with a loss or a smaller profit than you had. And yeah, you might miss out, but it's better to miss out on some than have it eat into your profit or give you a loss. You don't want a loss. Tip number 3, this is a good one. Don't listen to the analysts. The analysts on CNBC, on CNN, on Fox Business, all have their own agendas. So they'll come on and they'll say, what I'm telling my clients is this. That's their clients. That's not you. And the analysts usually have their own agenda. And they play into that, like in the previous tip of this last gasp kind of trading. If you've been following the news over the last few weeks, a lot of analysts have been coming on CNBC talking about the fear trade is over. The fear trade is priced in. We've seen the end of fear trading. That is markets where the Dow Jones tanks 1,000 or 2,000 points in one day. That's fear trading. And a lot of these analysts on CNBC have come out time and again saying, fear trading is over. Only for us to see, and why? Why are they saying that? Are they shorting stocks? Are they buying stocks? Did they buy stocks lower and now they have a loss? And they're trying to tell the viewer, go in and buy these stocks. So they push up the market so they can take out a little bit profit so they don't have to have a loss? Are they using their time on television to push their own agenda? If I have a loss and I go on the news and I tell them to buy, they'll buy, my stock will go up, I'll be able to sell it and take my money. You have to be very, very suspicious of these news types. I'm running on 10 minutes now and I don't want the video to be too long, but I think it's important to give you these tips on how to trade in a bear market. So don't listen to the analysts, they have their own agendas. But you do want to listen to the news. It's very important to listen to the news because you need to keep apprised of what's going on. But you also want to listen to the news because they will be talking about sectors that are getting punished today that are potentially good purchases. If your goal is to trade stocks during a bear market, not buy stocks at 50, maybe it goes down to 40, you don't really care because 2 or 3 or 4 or 5 years from now, you think it's going to be 100, that's different. That's investing. You can buy a stock now. Yes, it might go lower, but ultimately your goal is for it to go higher. You don't really care. But if you're trying to make trades, it's very important to listen to the news. Not to the analysts, but to the news. You want to pay attention to what's going on globally. You want to try to see if there's a particular sector that's getting absolutely killed today, because for all you know, a lot of other investors might also be watching, or traders looking for an opportunity to get in on a very cheap stock. There are last gasp pops. These pops happen frequently as people are looking for ways to make money however they can in bear markets. Stocks are tanking, but they are tanking incrementally. So they go down, but they come up a little. They go down even lower, but they come up a little. They go down, but they come up a little more. And those are the little pops. All those little where they rebound is what you're trying to capitalize on. You can capitalize on that by paying attention to the news. Oh, this stock is down 15% today. And you go on and you look at it, and it's a blue chip, high paying dividend stock that has, no debt, revenue up year over year. It's a very good stock, and it's very volatile because of the markets we're in. Maybe it goes down $15, $20 that day. You can buy it. That's a great opportunity to get in. And then the next day or even that afternoon, it has a little bit of a resurgence, right? It goes down, it comes back up, you sell it, you lock in your profits, you walk away. You want to also pay attention to the sectors that are working in a bear market. Where are things that people need? So, and will continue to use. So in this particular coronavirus case, we're seeing Zoom is a company that people are buying because they're all working from home. So they have to have these group meetings. We're seeing other companies like, I can't remember the name of it, but it's the one where you can chat with your doctor over the internet. That's a great one too, because a lot of people don't want to go to hospitals and risk infection or risk infecting others, but they still want to do telehealth and chat with their doctors. So stuff like that, great stock to think about, not to buy. I'm not an expert. I'm not a financial advisor. I'm not a broker. I'm not licensed. I'm not telling you what to buy. It's just for educational, just to give you a way to think outside of the box. For example, in 2008, during the recession, alcohol stocks skyrocketed because people were depressed and they were drinking. It was the one place where they were spending their money. They weren't buying shoes or clothes or cars or pocketbooks or anything like that. They weren't retail, going to the theater, going to movies, traveling, but they were buying a lot of alcohol because they were fucking depressed. So you have to think outside of the box sometimes. People aren't traveling. People aren't doing things. They're staying home. They're streaming. You want to think about stuff like that. And finally, like I just said with this last gasp kind of trading, pops are a thing. You want to pay attention to pops. As the markets drop, investors are looking for a place to rush in to make a little bit of money. And they're looking to make it very quickly, which dials back to tip number 2, which is to take smaller profits. Any profit you have, take it, because incrementally things are going to get worse. So if you thought this video was helpful, if you liked what I had to say, please give this video a like and subscribe and hit that little bell so you get notifications when I do new videos. I'm sorry that this video is almost 15 minutes long, but I thought it was important to get a lot of these questions answered on how to trade in a bear market. Thanks for watching. Have a nice day.